thank you all very much for hanging around this long. It's the last session on the last day. There was a big party last night. You're all tired. So we've got a whole bunch of investment rock stars on the table, one of whom plays great guitar. I won't tell you which one. See if you can figure out which one. OK, just Tim Chang. I'm Tim Merel from Capital. We're a games investment bank. My background, software engineering, law, and business. So I'm just as happy to talk APIs as I am to talk money, as I am to talk contracts. I'll let each of the guys introduce themselves.
Hi, Hany GGV Capital. Hi, Hany GGV Capital. Been around for about 10 years investing in the gaming space. We have 9 investments in the gaming space between the US and China.
Hi, Greg GOTTESMAN, Madrona Venture Group. We do early stage investments. We've made several investments in the gaming space. Looking forward to the discussion.
I'm Kushal, SAHA. I'm a managing director with Cascadia Capital. We're an investment bank focusing on the gaming space.
Hey guys, I'm Tim Chang with Norwest Venture Partners. Do a lot of mobile, digital media, some gaming stuff here and there. Playdom, NG Moco, Lumos Labs, My Yearbook, Badgeville, those kinds of companies. Glad to be here. Thanks.
Viney SINGAL, Valtus Capital Group. We are an investment banking firm specializing in the game industry, merger and acquisition advisory, and capital raising.
Well, look, to try and keep you awake, I've asked the guys to be direct and actually tell you the truth. And they've promised me that they'll argue. There may be a fist fight, which is what I'm hoping for. So let's see how we go. So do you guys think now is a good time to invest in games?
No.
You can go home. Done.
Yeah, I think you've got to be a lot more specific in the question. I think there are certain segments and areas that we're very excited about, that I'm very excited about investing in the game space. And there are areas that are way overhyped and valuations don't make sense as an investment perspective. I think in general, you're seeing a huge trend shift in gaming, and I think that always makes for opportunities for investments. But you've got to be very, very careful of where you invest.
Tim, what do you think?
Sell, baby, sell. Look, in markets, there's times where you kind of grow and then you harvest. It's like Farmville, but it's like Game Investmentville. And so now is the right time to, I think, harvest your investments if you can, especially while the market's hot. Here's my view. Right now, we've got some great comps. We got PopCap, we got Zynga about to go out, and that's going to fuel an acquisition warfare at high valuations. And in the meantime, entrepreneurs are rightly going to say, I want a high valuation multiple too. And for guys on my side of the table, I'm saying they're sitting there looking at that saying, oh man, I got to invest at this kind of price. That means they have to do like 5, 10x that to get out for me to make money. It may be easier to be selling a company now while things are hot. So it's always a game of timing, right? It's like surfing. You got to know how into the set you are and how close you are to sunset. So that's the trick. And I was kind of saying this yesterday. Are we early afternoon or late afternoon?
Greg, what about you?
So I agree with both folks. I think it depends what type of area you're in. I think if you're building another social game, if you're just sort of starting out now thinking, hey, I'm going to get into mobile, that was something that a lot of us were investing in last year, the year before, and so obviously there are companies that have traction, and depending what stage you're going to invest in, you could look at that. But what I think I'm excited about in terms of new investments are, and hopefully we'll get a chance to talk about this, are sort of new exciting areas that maybe are a couple years out as opposed to the ones that are sort of hot at the moment. So to your specific question, I think you're saying investing in sort of the hot areas of games today. I'd say no, but are there some really interesting investment opportunities in games? Absolutely, there are.
Well, I'm going to hit the 2 investment bankers on the panel, so the 2 other investment bankers. Sorry, but I guess a question. I mean, in terms of some of what we do, we're about getting transactions done. So we're more on these guys' side than these guys' side if we're trying to get a transaction done. So if you're thinking sell side or buy side, what's exciting for you guys at the moment?
Yeah, I think right now it's sell side. I mean, given that from what I've heard, it's sell baby sell. I think there's a lot of demand in the market. I think there are a lot of the traditional players who are looking for acquisitions in the space, given that they need to make a bet. If you look at the size of the gaming industry right now, it's in 2010 it was $42 billion. 26 was in console and PC gaming. Fast forward 2015, it's going to be $52 million, and more than half is going to be mobile, social, and casual gaming. So it's really forcing a lot of the incumbent players to think very, very strategically, and the market is basically forcing them to make a move. So I think there's going to be a lot more M&A activity in the next 12 to 24 months. It's a good time to sell.
Nobody can hype valuations and hype an industry better than Wall Street. So, Wall Street is just, fully getting around the game industry now, the social game industry, and, the Zynga IPO is going to create an incredible fever pitch around the business, and a lot of the, other companies of size on the social game space that are waiting to go public, are also going to be pushed into going public. It's a terrific time to raise money, and there's going to be a lot of dollars thrown at this industry, rightly or wrongly. And I think whether it's a strategic company or the VC community, if you have a quality company and you're looking to raise capital or sell, now is absolutely positively the time to do it.
Well, it kind of leads into a word I think I've heard here more in the last week than I've heard probably for the last 6 months: frothy. What do you guys think is going to happen in terms of games investment in the next 12 to 18 months?
Yeah, generally, there's so much of growth left, right? I think there's going to be growth in pockets. Mobile is a great area for growth. I think the valuations, in my opinion, hopefully, they'll hold. At some point, there's going to be, it's basically a demand-supply gap right now, to the extent there are a few players who've already, led the market and staked the claim, and they're the leaders. In new areas, there are going to be new leaders that are going to be emerging, and that's going to also, help in the consolidation process. So there's going to be, I think, the valuations are going to hold as long as the companies have a need to get into the space, at least in the near term, and hopefully it's true for you guys, especially with some of the investments you still have.
I think in the time frame you asked for, the valuations are going to hold, and there could even be more frothiness. You're going to see some of the other big game companies that are not in social get into social. I think everybody's waiting to see what Activision Blizzard does. They've been very quiet. They're not going to stay quiet. That's going to create some more activity, and I think you're going to see other game companies beneath Zynga go public as well, which is going to continue the frothiness. And again, barring any big macro, economic event that happens, I think you're going to continue to see these valuations rise for a while before they correct.
Coming back to the VCs on the panel, in terms of the volume of games investment deals, do you think it's going to keep on accelerating? Do you think it'll level off? What do you think is going to happen?
I get more, seed deal pitches than ever before. Raising $1 million, uncapped note. I want to develop my first game, see how it goes from there. But the real question is, what do you do after that? Anybody can raise the 1 million seed round, but it's the Series B follow-on. That's the tricky one. And so the trick is, if you don't make milestones before you run out of that $1 million, then you're kind of trapped. And so that's what's going on at the early stage. On the later stage side, a lot of the guys you see on this panel, we've been at games for a while, so we've been making bets since pretty early on. And what you're seeing is sort of the bandwagon effect. And, not to diss some other VCs, but you're going to get a lot of Me Too behavior. Oh, I got to catch this wave while I can. So you're going to see the race of dumb money into the space. And what happens is, and the bankers know this game really well, you get a company that's got momentum, then they do a fundraise process to try to rake in as much of a war chest as possible, right? And get it at the highest valuation. And unfortunately, those who are deepest in a space and know the risks best are least likely to overpay. So, they'll call me up and I'll take a look and say, I like this, but I'll probably end up bidding half of what some other firm that's got tons of money burning a hole in their pocket that they gotta deploy, and darn it, they missed out in the first wave of companies, and they'll write giant checks at ginormous valuations, and that's what will happen. That keeps valuations high. If that company, though, that raised the money is smart, they will not spend the money. They'll keep it as a war chest, and if the market tanks, they'll go and acquire their competitors. I think that's been the state of thinking for sort of the mid and later stage companies.
I was talking with one of the Google Ventures guys last week, and he used a wonderful term, FOMO, fear of missing out. I know you two guys on the left, you're not interested in jumping on a bandwagon. How do you think about games investment going forward for you two?
What was the, say that again?
Oh, sorry. Fear of missing
Fear
out.
of missing out, yeah. I don't have a fear of missing out. I think what we're trying to do is, I mean, obviously we're looking for great teams, and we actually made an investment in a social games company about 6 months ago, based solely on a little seed investment based on just the quality of the team. But what I'm interested in, why I have hugely bullish on games long term, are some of the opportunities that I think are beyond social or beyond mobile. Things like augmented reality, virtual reality kind of things, where I think we're still not even in the first inning of, it sort of reminds me a little bit of the Wii when that first came out. Everyone's like, is this going to work? And then all of a sudden they're like, wow, this is incredible. And then there's Kinect. What's the sort of the equivalent in the mobile space around, using the real world, using location, using augmented reality? I mean, there's so much, I think, still yet to be written in sort of really interesting gameplay. So that's what I'm excited about. That's why I think there's still a lot of room for interesting new companies that can be dominant sort of 10 years out. I don't believe that the games that we play today, even in a social context, will be the same ones that we're playing. Even women, in Kansas, I don't believe the same games that we're playing today will be the same ones they're playing in 10 years. I think we're going to see a different type of gameplay, a more exciting gameplay, and that's what we're really looking for at an early stage in terms of new investments.
There's two concepts I think so far we've touched on, but I want to kind of go at them at a different angle. The concept of buy low, sell high. Easy to say, really simple to think about, but incredibly hard to do. Nobody wants to buy when things look like shit. That's the time to buy. When things like shitty, that's the time to buy. That's the time to invest in the gaming space. All our investments in the gaming space happened when other VCs hated the gaming space. Now that everybody on the planet, X minus these guys, because these guys are smart, didn't want to invest in the gaming space, that's the time for us to sell. So Tim said it right. This is the time to harvest. So, but there are segments that are out of favor in the gaming space. If you think about the whole social segment, that's becoming more and more out of favor, if you will. There's still some frothiness there, but it's becoming more out of favor. Now the heat's turned into mobile, right? So what have I done in the last 3 months? I've looked at some social gaming startups, but something very different, things that are very different, right? I think you touched on this, right? There was 10 million hardcore gamers on the planet prior to 2005. 10 million gamers. Now, my wife, who does not think of herself as a gamer, is a gamer. That's 500 million people that have now all of a sudden become gamers. They don't know they're gamers, but they're now gamers. The games that they're playing today are shitty. They're spreadsheet games, goddammit. They're shitty. Build some good games for my wife. She'll pay you a lot of money. So those are the areas that I think we're going to see a lot of investments, at least from me or us, in the future. That's one area.
So I guess, sort of talking to both sides of the panel, what do you guys care about most when you're investing in games companies, when you're advising clients to invest in games companies?
I was going to touch on my second concept.
Sorry.
Almost second concept is the success curve, right? 2 years ago, the success curve was fairly flat. You got 5 guys, built a game on Facebook, and 3 days later, they're driving Ferraris. Success curve was fairly flat. Today, the success curve is steepening, where the haves are continuing to get more and more, and the have-nots are way down here, and a lot of them are going away. I think it's going to continue to steepen, and the curve is going to be almost exponential, where the winner is going to win a lot more. That's the reason. I mean, rank is the reason for this, right? When you show up and rank at the top, you're going to keep showing up, and the guys that don't rank are going to go away. So that's another aspect. If you think about your business in that and from that perspective, it's really hard to break in. If you're doing another Farmville game, if you're doing another one-button click game, you're not going to be as successful as Zynga that's going to do it, and they're going to do it better because they've been doing it longer. So think about that success curve and try to find a new game, a new area to take it. Play on a different field. Create your own success curve. Don't try to follow everybody else. Don't be a follower, be a leader.
So we're good? I can ask a question now?
I'm done.
Right. So,
I moved the mic.
Thank you. What do you guys care about when you're actually investing in games?
People.
Yeah, I mean, I think people are the number one thing, and it gets trite, but you're looking for, especially in the games space, incredibly talented folks. And what's interesting, what I do think about The game space that's different is it's a different kind of person that than sort of for other sorts of investments, at least for us. You can. We're investors in a company called Z2 Live, and the guy that built the Metal Storm was an 18-year-old kid. I mean, incredibly talented person. So I think it can come in all stripes, but people is always number one. And then we've already talked a little bit on some of the sort of people that can be leaders in their space, because there's a disproportionate win for folks or disproportionate economics for folks that can be leaders in a specific space as opposed to just followers.
Definitely team, and I'll add to that some approach to get new distribution muscle. You'll often hear me say, yeah, if content is king, then distribution power is God Almighty, particularly when distribution platforms are in flux. Because when distribution changes, all the kingpins of the past fall down and new gatekeepers pop up. And who can be the new gatekeeper on a new platform? That's really worth fighting over. There's different ways to get there. You can do it by aggregating other people's content, publishing stuff, or doing your own IP. But eye on the prize, it's about distribution. One other thing is then maybe clever monetization mechanics. And I've been thinking a lot about this. You hit a paywall, and we all know freemium is the way to go, right? But when you hit the paywall, there's still innovation left. You can buy it or earn it. On the earn it side, there's all sorts of neat things to be done. We've had offers, we've had CPE ads, but I've been thinking about, what if your goal is to build a database business of users? Well, you say, well, I'll give you this virtual good if you tell me your email. Next time, I'll give you this virtual good if you tell me your phone number. Next time, I'll give you this virtual good if you tell me your income. Pretty soon you can build Experian. I mean, there's lots of new mechanics yet to be built, and I think if people are thinking along those lines, that's clever.
Yeah, I think with regards to gaming, the barriers to entry are very low, but the barriers to success are very, very high. So I mean, when you're thinking of, I'm sure when you guys think about investing in companies, folks are looking for something unique, whether it's technology, people, talent, specific IP or specific rights to titles. That's really going to be unique and make a company successful. I think that's what really folks are looking for. I mean, how do you create a successful business, scale it, and maintain your position? So you got to think about that, because if you can do it, somebody else probably can and unseat you. So you got to figure out, how do you create those walls? Unlike in the past, you had companies like eBay and other, Amazon, throw in tons of money, you're successful, nobody else can beat you. Over here, I mean, the entry point is so easy, it's so low. How do you really build those walls and create a defensible position? I think that's what's going to be unique, and that's what people are going to folks are going to look for.
Well, I guess another question this time to the bankers. When you're advising these guys on trying to raise money, what do you tell them that actually the other guys don't want to see, or when it's not the right time, or when they've got a gap? What should they try and deal with if they've got something that's actually going to be a problem? That when they talk to these guys, they'll have a very nice meeting, they'll shake hands, you'll get that sort of very faint smile, and then you'll never hear from them again. What should they not do?
I mean, one of the first things that becomes very apparent is, the depth of the team and ability to, communicate the business plan. It's, we always say, a great idea and, $5 gets you a cup of coffee at Starbucks. And, you've got to be able to, adhere to a business plan and adhere to a budget and adhere to timelines. And if you can't express that, you're not ready to raise any capital. If you can express that, then I think, it comes down to what, all the other people talked about here, that what makes a successful game. And but I think that you've got to keep the team as important as what your product is, or you'll never, get past first base.
And I also think, what should be communicated and articulated to the investors, that focus. I mean, there are a lot of folks who are, doing some social stuff, some mobile stuff, doing dev for other folks. I mean, what investors look for is, is this team focused to not only play the game and win the game? So I think one of the things that the company should do is articulate that focus and articulate the desire to win and have a clear path towards it. Sure, it's not going to probably pan out exactly the way you've laid it out, but they need to hear from you guys that there is focus versus, we are a mile wide, inch deep. You should be deep. You should pick your spot. You should play it, and you should win it. And that's what they want to see.
One of the other things, just I think separates, I think companies that are, that show well and those that don't are folks that are really metrics focused. I think that's become a new must-have for games companies. I think driven by Zynga, but even some of the other companies that real analytical approach to how much it costs to acquire a customer, how scalable that acquisition model is, what's the lifetime value of your customer, how are you thinking about daily active uniques, how are you thinking about revenue per daily active unique, how are you sort of, not only thinking about acquiring customers, but then retaining them, and then the metrics around that, and thoughtfulness around how you are driving your business that way. I just think that's now become really a requirement for a gaming company, whether you're in social, mobile, or whatever you do.
So a question now for the audience. Put your hand up if you're trying to raise equity funding today. Okay. If you put up your hand if you're trying to raise project funding today. Okay. Tim, tell these guys what you do and don't invest in terms of project versus equity.
What we don't invest in?
Yeah, as in styles of investment.
I actually don't invest in games. I invest in development disruptors, and what I mean by that is you might use games, but you're really building up, kind of a network or a platform or a distribution base. I kind of usually don't tend to look for IP itself. I like it because I am a gamer, but I don't really look for studio plays. So, equity dollars as project financing is tougher for us. That said, there are a lot of super angels and incubators, and now, actually, the corporate game funds, those are great places to get money, especially for project financing. So Tapjoy's got a game fund, there's accelerators and incubators, and corporations are setting up, game innovation funds because they need IP.
Well, I guess a broader question for these guys. When they come to you, clearly you're going to look at the traction they've got, what they've done today. What should they be looking to actually build? How should they be looking to scale their company for you to really be interested? What's the sort of things which really grab your attention and make you think, this is a fantastic company, I have to invest here?
I mean, that's a tough question. One of the things you always have to think about is what's the outcome? Studios are valued differently than companies that have platforms, that sell platforms. I think of game studios, guys that can build good games, as great lifestyle businesses. If you can build 2 or 3 games, generate $5 million, $10 million, $20 million bucks, that's a great business to keep for yourself. Don't let us invest in it, because we'll wreck it. We will wreck it. We'll try to make you go further, build more games, try to scale it, and what ends up happening is the quality of the games goes down, and you end up burning a lot more cash, and you won't take as much home. But there are businesses that you can scale that are based on games and studio models. Tim touched on that a little bit. So it really depends on what you're trying to build. Think about what the exit looks like 3, 5, 7, 10 years from now. And if you're coming to me and saying, hey, I have this ability to build a game, and look how cool it is, I've got 1 million DAUs, and I'm going to build 6 more like it, I just need 6 times more money. To me, that's not a very good investment, because the likelihood of same level of success is low. So really think about what the exit looks like and the risk profile of that exit before you say, hey, I want venture capital dollars. The second you take evil money from VCs, we're targeting $300, $400, $500 million exit. And very few companies can actually get there.
And what's interesting, what the interesting thing about PopCap was, of course, a couple of years ago, everyone would be like, oh gosh, we can't invest in PopCap, that's a hits business. Of course, everyone now would have loved to have invested in that. And so I do think it's one of the things that's great about that acquisition is it makes everyone rethink, their prior. It makes you rethink the business around sort of, clearly that was an investment that everyone I think should have been more aggressive about trying to participate in. One of the things that I think I always am thinking about when I'm talking to entrepreneurs, games or otherwise, is what can the people across what can you be best in the world at? What can you be better than anybody else? Not just in the United States, but in the world. Is there something that you can do uniquely well because of the team, who you are, where you're focused? And I think if you have an interesting answer to a question like that you can be best in the world at something, some investors will find you appealing. So as you're thinking about building out a business, not just a game, ask yourself, is there something that you can be, world class, truly best in the world at? And if you can answer that, I think you'll be in pretty good shape.
Tim, what do you think?
One other element you could think about, instead of the studios or the content aspect, is the enabling and the plumbing behind games. Because what is really interesting now, all games are services and they're ongoing. That's a lot of back end, right? And it's a lot of painful, analytics and hosting and optimization layers to build. And so we're seeing the rise of more and more game plumbing companies. It's not as sexy as building a hit game, but everyone needs you. So, what would Heroku of, kind of mobile games look like? That's just an analogy. But we'll see more and more companies trying to be like the Amazon Web Services back end for games. Hence, there's a lot of rising hoopla in things like HTML5 game engines, mobile app platforms. That is not as sexy, but I think it could be a pretty big market if you crack it. What I like about those areas, think about the number of companies that need to get into gaming or need to move into new platforms, including older publishers, EA, Activision, etc., who need these pieces. If there's only like 4 or 5 teams that know how to build this kind of stuff, then by definition, there's more buyers than good assets out there. And so that's one kind of dynamic I like, is when there's a lot more buyers than there are good assets.
All right, here's the fist fight. Can I disagree?
Hooray! Cameras?
One of the things that I remember from the old Web 1.0 days is the advent of tools to build websites. Everything from front page from Microsoft to, I forget, NetObjects. There was hundreds of companies that were quote unquote enablers. And in the early part of the market, I think a lot of people need tools, because there's hundreds of players. It's a flat, as I said, going back to the success curve, it's a flat success curve, and everybody wants to build games. And so yes, people are going to need tools, are going to need platforms, are going to need back-end services. But over time, as that successful steepens, and if the successful steepens, this is my hypothesis, the success curve will steepen, and there'll be few winners, and everybody else will be also rans, if not out of business. What ends up happening is those successful big companies are going to build their own platforms, because it becomes a key differentiator among the 3 or 4 or 5 of other vendors. And what happens to those tools vendors, unless they migrate to other areas, it becomes very difficult. And so I think you have to be very careful about what you're building. I think analytics is one area that's very, very difficult to do. You need physicists, you need mathematicians, you need economists to do this. So that's one area you can build a tool set or a measurement system, much the same way that Omniture and others have. But if you're trying to build a 3D engine, or if you're trying to build an optimization layer, if you're trying to build a multiplayer matchmaking service, I think a lot of those systems will be captured by the big players. And I think as an independent vendor of platforms like that, you're going to struggle. So you have to be very careful about the platform and where you think, if I'm right about the success curve, who's going to be buying your services? The 5 guys that are going to want to buy that Ferrari because they built a really cool game are not going to be around in 2 or 3 years, or 2 or 3 months. So you have to be careful about the platform that you're building and making sure that that platform you're going to have a big enough market to sell into, because I think the market's going to shrink over time. It wasn't much of a fist fight.
No, I don't see anybody objecting. Tim's nodding, which is quite rare.
Hany's right. It's a good clarification of the type of markets you're after, because if you're just aggregating long-tail indie guys, it ain't going to be a big business. So the litmus test is, if you're offering enabling and infrastructure, and better yet, hopefully cloud service type offerings, what's it take to get to $1 million account size? Once you're signing $1 million per year account sizes, you got a business. But if you're dicking around with like, $5K, $10K a month, and that's the part you're definitely right. You're going to get consolidated out, and you can't build a big business.
Well, I guess a question for the whole panel, because we're really trying to help these guys raise some money. And we'll start down the end and work our way back. What's the best way to actually get these guys to approach these guys for money? How should they come in to actually get heard, get listened to, and hopefully get some money?
Look, I concur with a lot that was said on this panel in terms of it's a good time to sell and valuations are frothy. But the reality is the VC market is a momentum market, and it's a fantastic opportunity to raise money in the game segment just because there's incredible amounts of dollars flowing. And there's going to continue to be incredible amounts of dollars flowing because of just what's going on in the environment. So I think what's key is, again, you've got to have a developed team, and you need to differentiate yourself. I think a lot of the advice given here is good advice, and no need to repeat that. But when have the fortitude to see, with a good business plan, with a good team, have the fortitude to see 50 VCs, and you will get your funding if you can deliver a good plan, because there's just too much money out there for you not to.
It's funny, Tim and I were talking earlier about the venture funding market. Again, I think gaming has now become hot in VCs, and you're getting a lot of VCs that don't play games, don't understand games, who just need to get I need to have a gaming play in the portfolio. That's where you're gonna be able to raise a lot of quote unquote dumb money. Tim and I and Greg, all three of us have lost deals recently because gaming companies, good gaming companies, just because we know the gaming space so well, we weren't willing to overpay for companies. And so there's a lot of money out there, but it doesn't necessarily mean that you should be raising money from dumb players.
But I would say, and I think it's been echoed by some of the VC people here, you do need to differentiate yourself. If you're saying that, I can create this game, I can do this, well, who cares? There's 10,000, 100,000 of them out there. But if you can be creative and differentiate yourself, your chances are very, very good right now to get the capital that you want to get.
Yeah, I agree. I think there's a...
Sorry, just to touch on that. There's a lot of logic that, hey, Zynga's worth $10 billion. I'm 100th the size of Zynga, so I should be worth $100 million. It doesn't work like that.
Yeah, no, I agree with all the comments. I think there's a lot of money out there. There's a lot of focus on gaming sector. But just because there's money out there, that doesn't mean you just go out and on a fundraising spree, right? You got to be ready. You got to be prepared. You got to ensure that you're differentiated. These guys see a lot of ideas on a daily basis. How are you going to differentiate yourself? Be thoughtful. Pick the right timing. Ensure you have data. If you have a product out there or a platform out there, do you have data to back it up and the assertions that you're going to be making? So all the comments that have been made, think about it. Think about the timing from your perspective, just not from a market perspective, because if you go out in the market, there are 100 other guys thinking the same thing, and if you're not differentiated, you're not going to get funded. What are you going to do next, right? You've got one shot at it when you go and present to a VC, so you've got to be really well prepared, and I think be thoughtful about it.
You know what the best way to get a term sheet is to, from a VC, is to have another term sheet from another VC. I mean, it's so sad, but it's true. The second best way is to be profitable, or to not need the money, right? So I do think, as you're thinking about your plan, first of all, anytime that you can have a little bit of competition, just honestly, that helps move things along. And I think if you've got an existing business and you don't need, you're not sort of desperate for the money, I think that's going to make you more attractive to investors. So as you're building your business and thinking about your burn rates and all those other sorts of things, just be cognizant of the fact that don't put yourself in a position where you need to have, if you can help it, where you need to have the VC to come in, because most venture capitalists at a minimum can do a spreadsheet, so we can look at your burn rate and sort of see where you are. And again, if you can get other folks interested, I think that helps to move things along.
Well, I think folks here have probably had enough of me asking questions for the moment. So I think what I'll do is open it up to the audience. Have you guys got any questions for these guys? Come up to the mic if you can.
There's been a lot of talk about social cooling off a little bit because of Zynga's domination, sucking all the air out of the space. Specifically, those guys that are working in mobile, do you think that can happen in mobile in the next 2 years, or do you think that the structure of mobile is somehow more resistant to that?
I don't think Apple wants it to happen. I think it may happen inevitably because of the way that just popularity and human nature is. I mean, Apple, the App Store is designed not to let that happen. The game of the week, the way they feature games, all that stuff, they're trying to spread it out as much as possible. It's in their best interest to have as many developers as possible, right? But I think it's a very tough battle to continue to happen for Apple to keep that alive. I think by turning off the incentivized installs is one way for them to kind of continue to keep that, that game going for a while, but we'll see how long it lasts. Android, I think it's going to be even tougher on Android because it's so hard to stand out on Android that once somebody does and they can get that email marketing machine going to their existing customers, it's going to be really high. I think it'll be constant, even more, the success curve will be even more steep on Android.
Mark, the lurking man with the sunglasses, you about to ask a question, or are you just standing there because you're comfortable?
I was going to just add to Nadee's point. I think it's Hany's point, and make a parallel is that, you know what led to Zynga getting all that oxygen-sucking power is the triumvirate approach of Facebook social gaming, which was virality, cross-promotion, Facebook ads. Mobile has never had virality. Can't spend on mobile ads really now that CPI is gone. So all you got is the cross-promo part. And so, that's why we probably still don't have a Zynga of mobile. People want to build the layers on top, but Apple's got its own game center. I mean, from the start, Facebook never tried to do its own game center. So now we got people building layers on top of platform layers on top of platform layers. So that's why it's so fragmented. And then I guess to that point, I don't see that changing anytime soon.
George Donovan from Goji Games. So based on the models that I've heard you present so far, you're more interested in investing in a service that is user-based, that has growth potential, than a content business, even though the content business has higher or less risk for revenue if they JV'd with someone who has a user base. And I just cite the example. So you have a profitable company with a healthy team with a healthy growth rate. They have the opportunity to do a JV with Storm8, who have 100 million customers, and they can project 160 to leveling off to about 45% growth over year. Rather than have us go and raise some money to try to build a user base, qualify them, spend all that extra money, but then have more value because we have value per user rather than a revenue business. So is it more interesting to be high risk in user or low risk in cash?
Deathly silence.
I'm trying to think about how to answer that question and satisfy you. So ultimately, the value in a company in the gaming space is the value of its users. And you can extract value from your users by charging a tax on top of anything they play to the content creator, or you as the content creator own the customer directly. So if you ask me, what would I rather own? The App Store and get 30% of everybody's hide, or somebody's game that's going to do really, really well? Maybe. I'd rather get 30% of everybody's hide. Because the chances of success of beating Apple in terms of revenue generated in the App Store is very low from a single or multiple players. So again, it goes back to where is the value, where is the user, and who's extracting the most value out of the user.
Okay, so if I was to supplement on that, you're assuming that we're on one platform, but as a content owner, we have the ability to radically expand. Going back to PopCap, PopCap was very less valuable and attractive to you guys because they were a hit company. All of a sudden, when they're a user company, they're super successful and highly more attractive because they have a user base, but they only gain that user base because they're a content company.
Well, I mean, I think my answer to you would be, I don't think, again, if you're talking to folks, hopefully that you'd want to invest in you because you think they're intelligent enough to understand what it is you're trying to do with your business. They wouldn't look at something and say, I won't invest in something because it falls into this or into that. I mean, what I'm skeptical about a lot of times with content companies when they say, hey, and we're going to go put it out on Walmart and we're going to get all these customers, 9 times out of 10 it doesn't work. So I think, for whatever reason, the customers don't convert. So I think if you could prove it, if there's some proof points behind it, then maybe that's a model that makes sense. But what you're going to run into a lot is having looked at, and again, a lot of VCs, having looked at hundreds, thousands of different investments and seeing most things not work out, people are going to be skeptical until you've proven out what you say is your model, right? So if you're a content play and you say, now I can just go link that over there, look at all those customers, and they're all going to come up. We're going to be a little skeptical unless there's a little proof that that you can actually convert those folks. And and then on the other side, there's all kinds of other reasons to be skeptical. I don't know if that answers your question, but I don't think anyone's sort of stuck in one thing saying, if you're in that, I'm not interested, or if you're in that, I'm not interested. I think we're looking for great businesses and some reasons to believe that are beyond just you telling us.
There's two important things. They both start with that. There's the two S's, scalability and sustainability. Sustainability talks about churn and the half-life of a user over time. This is a consumer. Whether you're in a distribution business or in the content business, it's the same question. And then scalability is, can you scale beyond $5 million, $10 million, $100 million? And if you can do both those things, you are a great investment. But if one of those things is missing, you're not going to be a good investment. You may be a good lifestyle business. You may be a one-hit wonder where you can make $10 million and buy a nice house on the beach somewhere and call it a day. But you have to have both. And you can have both by having either a great content business that's shown consistency and success, or a business where you own massive users and you can monetize them because of everybody else's work.
I do like your line of thinking, though, in the notion of extensions, So let's take an example. PopCap was investable by Meritech because they'd already had hit franchises like Bejeweled. The next logical leap is, let's take them social, let's take them mobile, let's take them freemium, right? So that would make them investable at a much higher valuation, which they deserve because they proved they could get those users. Similarly, I've been looking at what could I do with a prominent Korean, free-to-play MMO game company that's still stuck in the download client era. Could I buy them out and turn them browser-based and then social and mobilely published on HTML5 with, continue the freemium model but get rid of the download client? So you can do that. And yes, that is actually a later stage investment strategy. Find a company that's got the user base, has the hit content, but then sort of expand or morph it. So, I think Rich was thinking that at Excel when he did Rovio. Awesome title, right? Angry Birds, they got all this domination. What else can you do with it? Freemium, extension, can you make it a platform? Can you turn it into a distribution network? Possibly. So, that is one way to, look at it.
I completely agree with that. If you see $1 billion has been invested so far in gaming, and if you take out, Zynga, 500 million, most of them have all been later stage kind of investments, growth investments, where people have proven that they've got a product or they've got a game that's working, they've got proof points, they've got data, and they're thinking of ways to scale it just beyond that one game, right? And I think, there are a lot of examples. If you're really, really early stage, it's a different story. But if you reach a certain stage and your specific situation may be different, you may be a bigger company. People look for those proof points and how you can scale it.
It also depends on where you're looking for investment, and talk about some cultural biases depending on where you're looking for investment. So let's say you've got a games company that's going to do really well in America, but isn't necessarily going to go into China, but it's a big enough market here for you to really scale. Now, whether it's going to be exact fit for them is a different question, but if you can scale, then actually, so long as you really have a lot of traction, you're really going like that, then the fact that you may not be as profitable as somebody else isn't as big an issue. If you're looking at, say, a Chinese or a Japanese or a South Korean investor, there is still a slight bias to look for profitability earlier. It's just in terms of the way that the investment cycle goes. It's just where the market is at the moment. So if, say, you've got if you've got a games company that can do incredibly well anywhere, in other words, Angry Birds, you can't move on the Beijing subway for seeing people playing Angry Birds. It was built in Finland, so you guys can make a game that can work well in China, Japan, South Korea, Brazil, wherever. So if you've got the ability to go into other markets, then you need to consider the cultural biases and the business biases when it comes to investment. Any other questions? Yeah, please.
Very interesting point. I think you're dead on right. The enlightened revenue split model in the U.S. The enlightened revenue split model in the U.S. is 70-30. The content guys get 70, the distribution guys get 30. In Asia, it's 30-70, where the content guys are getting 30 and the distribution guys are getting 70. So right there, you can kind of see where the value proposition is. So it really does depend on the geography and the distribution strategy of that geography.
I mean, Tim, you've got operations in China. What do you think?
Yeah, that is totally true. The platform guys are so dominant, it's actually unclear if they'll even let partners build a big business on top. You know, and at least Apple lets you try to build a business on top and they only take 30%. Imagine, to Hany's point, if it was flipped around, at best you could only get 30% rev split. Holy cow, you'd never build a big business. And that's why we still don't even have a Zynga of China yet, because on Tencent, Renren, Kaixing, not only do those platforms take 70%, they build their own first-party games, right? So you're natural conflict from day one. And as soon as you get big, they go to you and say, I think we're going to copy you now, thank you, right? And so it's a huge conflict with the platform and its developers.
Well, let me ask the two of you that actually have operations in China. If you had the choice between investing in a games company that's focused on the various Asian markets or focused on the US and Western European markets, how would you consider them differently? Would you have a bias as to where you would want to invest?
Well, Hany's got, you know, you split between China and the U.S., so you're probably good to that.
We about half our gaming investments are in China, the other half here. The investments in China are uniquely different. They're not, you know, we've made investments in studios. Turbine was an investment. Glue Mobile's an investment. Both are studios. In China, we don't have studios as investments. We have platforms. So Douyin, a company that makes voice communications for gamers, 7 million peak concurrent users on a daily basis, growing like a weed, fantastic business. It's not dependent on content, it's dependent on users using a platform. We actually have a very unique strategy of a company that's making arcade game machines. So something very difficult to do, not easily copyable, even in China. So you have to be careful about what kind of investments you make in China. I would say that its studios are much more dangerous in China than they are in the US.
Tim?
I would agree with that. In China, it's trickier because the platforms, it's harder to build on top of, so you have to kind of control your own destiny. I guess my favorite example is Taomi just went public. Really good company. They're like the Club Penguin of China. They did it independently of, you know, the Facebooks or the Renrens or any of those sorts of things. They had to build their own destination, and they did it with only like $5 million raised, which is incredible. But it was a studio children's bet. They just benefited from the fact that there is no Disney there, there's no incumbent, and so they essentially had no real competition, right? One other trick I'll tell you about in China, content licensing is less sophisticated. So in the US, cutting deals with big name brands is really hard. They'll charge you giant minimum guarantees, licensing fees up front, take huge rev splits. Over in China, some of the emerging brands, like, I don't know, cartoon companies, toy companies, whatever, they're less sophisticated. So you could actually cut pure rev split, no minimum guarantee, no license fee deals with them. So there might be a theoretical opportunity to leverage an existing brand and customer base without, you know, paying that huge pound of flesh up front, which the US, that model would never fly. You could never be a white label operator.
So, are there any more questions from the audience? Down the front.
Hi, I'm Kristen with Ziggity Zoom. We have a network of family and kids sites, and then obviously IPs and stuff going digital. Well, my question is more about not of raising of money, but down the road, long-term, you know, potential of selling the company. And so my question is, what do you all bring to the table as far as expertise? In other words, are you interested in that piece of it or only in the investment piece?
Well, we're very interested in exits.
Shock horror.
I think that's where hopefully, you know, your investors will be aligned with you, and you want to make sure that when you take on an investment partner, that you realize that this is a person that you're going to be with likely for many years, and that you have a real, you know, trust-based relationship with this person. Because, you know, a lot of you know, I know, you know, I've been on the board of Wild Tangent now for 10 years. I think Hany's been on for a while, and you spend a lot of time with these companies. In terms of exits, yeah, I mean, because this is what we do, we have relationships with a lot of the buyers that go, you know, that where we've done deals with them or talked to them at length. So I think a good venture capitalist, a good investor, where you can be quite helpful, both in terms of the relationships, but also in terms of the process about how you go about, you know, selling your company, whether you should hire a banker or not. You guys will talk about that. just how you think about setting up, so you can get hopefully competition for your deal. My sense is that any dilution you take from a good investor, you'll probably make up much more than that, several fold on the back end in terms of an exit. I'm biased, of course, in saying that, but I do think that's the case.
The corporate governance and the board governance is very important issues when taking on a partner, but I think generally speaking, the management team is going to be extremely influential and generally, point decision making on, what happens with the business. If the management team wants to sell, the VC backers are, and exits are very, very good for them. And frankly, they don't want to be into investments necessarily if, the management team doesn't feel good about it or is not motivated enough to continue to build the business. So you shouldn't have, you shouldn't have big fights on a sale. It's, management's ability to, set up the board correctly and have the right corporate governance, but ultimately the VCs are there to support management and make money themselves as well.
When investors really want your deal, you'll have a lot of investors chasing you, and then they start to talk about the value add they can bring. And the truth of the matter is, as investors, we're really salesmen of capital. That's ultimately our job. And we'll all talk about value add, but I think there's 3 levels of value add. The very first level is just don't be disruptive, okay? I could be dumb money, but at least I'm not going to get in your face and tell you what to do and tell you stupid stuff. That's actually not bad. If you get somebody who's just going to give you money and just leave you the hell alone, that's pretty good. Next level up is somebody who knows your space, can actually bring you right into customers, can bring you partners, can actually help you recruit out of the industry, can give you strategic advice, position your product. These are like experts, and they probably come out of your domain, right? So they know your space really well. That's what we all strive to do, and we try to do, and we hope that we get a discount on pricing for it, but a lot of times we don't. And the holy grail of value add, at what every venture capitalist strives to do, is to be so plugged in that you can manufacture an exit. And there's probably a handful of people in the world that can do this. But if I'm on the board of Disney, or I happen to be on the board of Google, you can almost get to the point where you can create an exit for your companies. And that's the ultimate level of leveling up, right? I'm not there, but I hope to be there someday. But that'd probably be the most tangible value add I've ever seen.
Any more questions? Yes, down there.
How much does Facebook's market lack of a mobile application strategy factor into your decisions in mobile investing? And if Facebook were to come out with a web-based app store tomorrow, how would that change your view of the space?
It's a great question. I don't think, I personally have not thought about Facebook as a distribution mechanism for mobile apps. Great question. I don't know.
Isn't that the Spartan project too? I mean, that was the rumor around the Spartan project, right? Where you'd be able to leverage things like newsfeed for app notifications in Facebook. And the question is that in the Facebook app, or is that the Facebook mobile web page? And there's different ways you can implement it. But boy, wouldn't that be huge? In theory, you could open up new viral channels. But to this day, we've never seen cross-promotion of apps work from online to mobile app install and vice versa, mobile leading to Facebook online app install. And if any of you guys can crack it, let me know, because that's huge.
Yeah, as somewhat of a related question, someone once asked me, what happens if smartphones start supporting Flash? Think about that for a second, right?
Any more questions? Down the back.
Sam, any predictions on Google Plus's gaming model going forward?
Oh, this Tim. Or that Tim. That Tim, he was talking to you.
Yeah,
You're talking about Google Plus and what they can do for gaming? So Google's got 2 bets. They've hedged their bets. You got your Android app store for native app format, and then you've got Chrome or HTML5 bet, right? Google Plus would probably be a layer they would try to insert into both as the Xbox Live type of layer over time. But it depends how well they get adoption of Google Plus. I'm curious, how many people have tried Google Plus out there? I'm getting the email notifications, but how many people have time to maintain 2 networks? I was just going to ask, has anyone switched over kind of from Facebook over to Google Plus? it's kind of hard. So I've been using it, but I notice I keep looking for the like button or the Facebook Connect button, and so it's something I've noticed myself. So I would say my answer is they will insert it in every hook they can, as they should. But if Google Chrome Store itself doesn't get adoption, then Google Plus in that may not get adoption as well. So the real, I think the real wild card is Android, if that's inserted deeper into the Android API stack.
Well, any more questions? Oh, yep, down the back.
One of the things that I think is interesting about Google Plus and some of these other things is, you know, even this audience is too old, but I look at what my 11-year-old son is doing and how much time he spends on Google Voice, you know, the video chatting he's doing with all his friends, and you know, my question around some of these things is what's not this crowd, but what's the next, you know, the next group of teenagers? What are they all going to be using? And my sense is Google's got an interesting shot there, and because I think this idea, the circles idea, I think really resonates. I know with he was, you know, among all of his friends, that was really exciting to him to be able to separate, you know, from his parents and to be able to sort of have different sorts of groups of folks. And so I think they've got a nice shot at what I think is a really important upcoming demographic, and I think that younger demographic tends to drive a lot of this stuff. So, and I think also they've got some really interesting, you know, real-time video apps that I think when a lot of gameplay, I know with my son when he's playing, you know, whether it's on the Xbox or any kind of game, he usually has a video chat open with one of his friends, and they're actually talking about the games as they're playing, looking at each other in real time. I think that's the future. I think is it's not clear to me that Facebook dominates. In 10 years from now, we might be thinking about it could be a whole new, you know, a whole new social network, maybe one that hasn't even launched yet.
Can I ask a question to the audience? Anybody working on gestures for mobile? Raise your hand.
Interesting.
Connect for smartphone,
Yeah,
right?
Connect.
There's a lot that
idea.
can be done there.
Actually, I can partly answer the question. There's actually a company based in Shanghai that's working on the same thing.
Watch for it.
I like that as an idea.
I can't give you dumb money phone numbers, but maybe I can give you another one, which would be references to, let's call it smart non-VC, you know, project financing. I referenced the innovation and incubation funds of folks like the Tapjoys and CrowdStars and other folks. The reason they're doing that, they need IP, but they also need developers on their platforms, because, right, they're fighting for platforms. So if you're OpenFaint or, you know, DNA with ++ and all those guys, you're trying to build an ecosystem. One of the ways to do that is to fund the ecosystem. So instead of chasing, you know, us idiots, we're more herd mentality guys. The platform guys will provide you, you know, $250K, $500K, whatever, in exchange for you building and distributing on their platform. So that's a great source of potentially, you know, project financing if you just want to get your first game out and prove a concept and start building from there.
Well, a slightly loaded question, which may cause a fist fight between the audience and the panel. How do you guys feel about the funds that are within corporates? So whether it be within a Time Warner or a Tencent or something like that. How do you feel about them?
Pains in the ass.
Anybody here?
I've done a lot of deals or rounds with strategic investors, because that's what they tend to call themselves. And they end up a lot of times stifling conversations, strategic conversations and companies and boards most of the time. Every once in a while you'll run into a very good strategic investor. I think the folks at WPP have actually done a fantastic job on a couple of companies. I've done one with Time Warner, actually was very good. But by and large, my experiences with corporate investors is that they're not driven by the profit motivation, so you're always unsure of where they're coming from. You know, it's very clear what I want, right? So it's always unclear about the strategic investors.
You guys agree?
I just think it depends on who, you know, who. So I think Hany's absolutely right. There are cases where that happens, and then there are cases, as you were mentioning, you know, a case where I think they have been quite strategic, and I think a lot of it depends on who from that that strategic partner is going to sit on your board or be your board observer. If you can get someone that, you know, and then also get a commitment that that person is going to stay with you beyond sort of the first 6 months. But if you can get someone that you feel really comfortable with, I think it can be better than if it's just sort of, you know, taking the money because you think there's going to be some kind of strategic value from the corporation itself.
And just from a deal perspective, I mean, you've got to see if there are any strings attached. I mean, is there a right of notification or right of first refusal, you know, in an M&A kind of scenario? And I think that's very important. Also, you know, for other potential buyers of your company, having a strategic in there optically, what message does that send? So you got to be thoughtful about that. Not to say strategic investments are not good. You got to be, you know, you got to treat it on a case by case basis.
Any more questions? Yeah, down the front.
Are any of you investing in any entertainment products that are based on evolutionary computing technology?
You mean like connected toys or something like that? Or?
No. Evolutionary computation techniques where it's true intelligence.
Okay.
Where they learn things on them.
Like adaptive computing and learning algorithms and things like that. AI. AI's been a tough spot to invest in the past.
We haven't made any investments in that space. One of our venture partners is an expert in that area, but we have not made an investment in that area.
I'd say one space where I see that sort of thing happening was with, if you look at Torsten Ryle, who opened the conference with Natural Motion. It's not exactly the same thing, but it's a little bit the same direction.
Yeah, he does use evolutionary computing, but from a design standpoint and creating natural motion, which is the name of his company. But
it's a cool idea, though.
There's a lot more that can be done.
Right, like,
It reminds me a little bit of Paleo. You remember the Paleo, that little toy that had some AI? And
That was cool.
that was pretty cool, but it wasn't a commercial success. But it was cool technology.
Yeah.
Kind of like the Cylons.
Any more questions?
That was cool.
Well, look, you've all been incredibly generous with your time, so thank you very much. I'd like to thank these guys who've been very generous with their time. So let's give each other a clap.